Hello and welcome to the Week in Forex. I'm Kate Lehman and today we'll be taking a look at some of last week's market highlights. Volatility returned to the Forex markets as the dollar weakened significantly before the US holidays, despite the release of some very positive US economic data, only to pare most of its losses on Thursday. Gold resumed its advances to make new highs, while oil continued to hold firm just under $80 a barrel. For a closer look at the markets, we're joined by foreign exchange analyst Martin Smith. Hello, Martin.
Hi, Kate.
It was a volatile week in the markets. What kind of a fallout can we expect from the Dubai World company requesting a standstill agreement from their creditors?
Well, there are two concerns, aren't there? One, will fear grip the market? So far, the reaction has been a complete equity sell-off. And two, the actual financial impact is what really needs to be measured here. Well, we saw credit default swap rates jump on all emerging markets, but we also need to know who sold those swaps and how much they stand to lose. I mean, if creditors are not repaid, will they survive, and how will this impact comparable markets?
Now, the day before the Dubai news, the dollar index slid to a new low. What was driving the market?
Well, earlier that day saw the release of new home sales, jobless claims and consumer confidence, all printed better than expected. Remember, our definition of good in today's market means less bad. After all, there were still 466,000 initial jobless claims filed. That of itself is not good, but it's a whole lot better than the 501,000 of the week before.
So it seems that this brings confidence to traders to keep the carry trade alive.
Exactly. Well, this is the foundation of risk-taking in the market. You finance your positions as cheaply as possible, as securely as possible, and invest in a high-yielding instrument, over and above, of course, your financing cost.
If we can just shift for a moment from Forex to the commodities, what is your take on gold?
Well, gold is the hot commodity right now, although we will see a retracement. Overall, gold has good reason to stand on firm ground. I mean, a number of countries have been steadily building up their gold reserves. In addition, you have the rumors from the IMF, Russia, and many other countries regarding a move to a more global-like currency. So gold has good reason to be bid.
And what about oil? Now, it's been consolidating below $80 for quite some time now.
Well, it's hard to see, anyway, for the time being, oil moving north of 80. The report on inventory oil reserves in the US printed higher than expected. So unless there are refinery issues or it turns out to be an extremely cold winter in the US, oil will only move up on dollar weakness.
Will the commodity-linked currencies suffer as a result?
I don't think so. I mean, they've enjoyed great price appreciation on the back of rising commodity prices, and coupled with a weak dollar and anticipated global demand as the recovery gets underway, I don't think the Aussie, CAD or the New Zealand dollar will suffer.
Now, looking to the week ahead, we saw the euro and the Swiss franc breach resistance, but then retrace their gains. Will they struggle against those levels, or was the move real?
Good question. It's hard to say when volatility is light because of the holidays, of course. However, I believe the breakout was real and they will sustain these levels. I'm just not sure if this will occur prior to year end or not, as risk is going to be off the table for most traders as they seek to secure gains heading into their fiscal year end.
That's lovely. Martin Smith, once again, thank you very much. And thank you for watching. Remember, visit us at UFXBank.com for simple, safe, secure trading.